Welcome back now to our next conversation. With the volatility in the FX market, the Nigerian naira fell to about 604 naira to a dollar. The parallel market from 565 at the start of the year, consistent with 39 naira loss year to date. Meanwhile, trading at about 490 naira to the dollar in the INE window. For more now, we have Patrick Kuran, senior economist at Telema, joining us right here on Business Morning. Great to have you on the program.
Hi, good to be here.
Yeah, so from your point of view, why do you think the Naira has lost so much value in that parallel market, and why are we seeing so much volatility?
Ultimately, for the past year or so, the Naira has been pegged around 410 or 415 to the dollar in the official market, which in our view is an overvalued rate. So in this type of situation, really the parallel market is the only safety valve for price discovery for the true value of the currency. So I think the depreciation really is reflecting a fundamental mismatch between supply and demand in the market that's trying to be satisfied in the parallel market.
Right, and the difference, between the INE window and the black market is expanded by about 188 Naira. What do you think is the economic impact of this disparity?
Sure. I mean, the CBN's stated rationale for pegging the currency for a long time has been to protect ordinary Nigerians from the impact of inflation. But of course, the longer that the overvaluation and supply shortages have persisted in the official market, the more goods have begun to price off of the parallel market anyway. So effectively, it passes through to inflation in the same way it would if the currency was devalued in the official market. It pushes up the prices of goods, but it's something that would happen regardless of the mechanism. If it depreciates in the official market or the parallel market, either way, inflation becomes higher.
And what do you think, could help strengthen, the Naira to the greenback at this point?
Yeah, I mean, it's a difficult question, and I think really it's a two-part question, because the first part is, I think, really what needs to be done to strengthen the Nigerian economy, and I think a big part of that is more flexibility in the official exchange rate market. So regardless, with the Naira being overvalued right now, there needs to be further depreciation to make the exchange rate competitive, to make Nigeria's non-oil exports competitive, and to restore supply and demand balances in the foreign exchange market and attract investors. So a devaluation really is an essential component of Nigeria's longer-term growth outlook. That said, to make it strengthen in the parallel market, I think the solution is quite similar. While I think it's overvalued, I don't think 600 to the dollar is the appropriate valuation either. So really, I think if there was more flexibility in the market, the two exchange rates would probably meet somewhere in the middle.
Right, and we've seen the greenback, hit new highs, with the DXY hitting a high of about 104 points, to a basket of other currencies. How has this, strengthening impacted, most currencies in emerging markets like the Naira?
Yeah, the Naira, like all currencies, has been impacted by the dollar strength this year. It's up about 5 or 6%. This is partly a reflection of rising global risk aversion towards emerging markets, and more broadly speaking, typically when the dollar does strong, most emerging market currencies perform weakly, and it's unclear if this strength is going to continue moving forward, if the dollar is going to continue to act as a safe haven currency, or if risks domestically in the U.S. about fears of recession and high inflation will start to dominate and cause the dollar to moderate.
Right, and the U.S. dollar index, seems to be pulling back a bit. It's about 102 points last time I checked. Do you think, the dollar has peaked or about to peak?
It's a really good question, and one I wish I had the answer to. I think the dollar, many people thought was overvalued headed into this year as well, but given its role as the global safe haven currency, has continued to strengthen nonetheless. So I think there's a strong argument for the dollar needing to weaken over time, similar to the argument for the Naira, but it's just a matter of when, and that's very difficult to predict given the technical factors at play.
And if it continues to, pull back, at this point, what do you think will happen to, emerging market currencies? Do we see them strengthening?
Yeah, I think so. And to be fair, emerging market currencies have held up relatively well this year, given the rise in global risk aversion. Most of the sell-off in emerging market debt more broadly has been due to rising treasury yields. More lately, it's been related also to rising credit spreads, so increasing risk aversion in emerging markets. But overall, I think really emerging market currencies have been quite resilient this year, which has been encouraging to see. I think part of that has been emerging market central banks being very proactive over the past couple of years. The Fed, of course, just began its rate hiking cycle a couple of months ago. Many emerging markets have been in the middle of their cycle for the past couple of years. So that's helped protect many emerging market currencies over the past few months.
And we're seeing a global inflation, going up at this point. A lot of central bankers, looking at tightening, and we're seeing more possibilities of more, tightening with rates, at this point with the Fed and in the UK too. We're seeing all regulators now looking at, raising rates to, tame inflation. But if this continues, what do you think is going to happen to, emerging market currencies going forward?
So markets currently are pricing in a very aggressive hiking cycle to about 2.5% to 3% by year end. This is about the same magnitude as the past 3 or 4 Fed cycles from the historical perspective, but is taking place at a pace that's about twice as quick. And it's also taking place against the backdrop of four-decade high inflation in the US. So there's a risk that markets may be underestimating the extent to which the Fed needs to hike, in which case there could be more pain in store for emerging market currencies. That said, if rates evolve in line with what markets are currently anticipating and the adjustment is more orderly, then there's also a chance that the worst is behind us for emerging market currencies. It's just very difficult to tell which of those two scenarios will prevail from where we sit now.
Right. We all need that crystal ball at this point. But,
Right.
We've had, conversations about, the ECOWAS currency. That's the ECHO. Do you think it's time to, dust off that idea and bring it, into the fore?
Yeah, I mean, it's definitely an interesting policy idea, but I think the political constraints to implementing that across such a wide set of countries with varying currency regimes, many of which, like Ghana, for example, have been well served by their flexible exchange rate regimes, and will be hard-pressed to give up the monetary policy freedom that they'll need to give up to have a pegged currency. I think the hurdle for that is going to be quite high. So while it's an interesting and important conversation to have, I don't see that as necessarily the most politically feasible solution to the current currency issues.
But if there's some consensus, you think it would help?
I think overall countries like Nigeria and Ghana and some of the larger markets in ECOWAS are better served by having their own independent currencies. The structures of the economies in the ECOWAS are so diverse that having a pegged currency that is at an appropriate level for so many different countries with a different economic context, I think will be very difficult. Ultimately, for some countries, it's going to be overvalued. For some countries, it's going to be undervalued. And of course, like I said, every country will have to commit to giving up their monetary policy independence, which I think for Nigeria isn't necessarily the most expedient route to go.
Right, quite a lot for economies to deal with at this point, from currency, inflation, so much to unpack there. But thank you so much, Patrick Curran, senior economist at Telema, for coming on the program, and enjoy your weekend.
Thanks for having me.